Now let's catch up with a Brexit trade idea. We're off now to IG's Geneva newsroom, and we're joined now from there by Ron William from RW Advisory. Ron, it's good to talk to you and able to catch up with you while you're in an IG office there. What are you looking at in terms of your trade idea around Brexit, which is of course every day getting closer and closer to that 31st of October deadline?
Well, the technicals are great during event risk times to give us the key trends and levels and just indications of what might be happening. At the moment, we've had a very sharp trend reversal up, especially as of last Friday's close, where we had an impulsive candlestick pushing higher. The move, the target, is actually up to at least 131, with various price targets in and around that level that I've highlighted on the chart. Key thing is to look at also the fact that we've had a bullish moving average crossover according to my short-term timing filters, 8 and 20 exponential moving average. That's what I use for trading setups. And just on the risk side, let's keep in mind that 121.50 is that midpoint danger line where we need to reevaluate the trade if we pop back below that.
And the oscillator at the bottom, you've got there a divergence. Explain what this is telling us.
Well, this is the momentum RSI indicator, which has basically been bearish and oversold for over 4 months. So during the year-to-date downtrend in the pound, momentum has confirmed it and actually been showing quite extreme oversold conditions. In the last month or so, we've had positive divergence and just recently popped above the midpoint 50% level, which is the kind of make or break level for the momentum indicator. We're now rising to new highs, and this is a good bullish sign. One disclaimer point here for people who are looking for the overall oversold levels. In a rising market from oversold conditions, a pop into the 70 level is a good signal, not an overbought signal.
Okay, so that's sterling against the US dollar as we're looking at things as at the moment with that big move up recently. What can we take from the longer term picture going back to that 2016 referendum?
Well, history does matter, and it often rhymes in technical analysis terms. And not only do these price levels matter in terms of time, but also in terms of the level itself. So if we go back to Brexit 2016, you can see that big cliff drop that happened post-referendum into the 1840 low. The midpoint, the 1/3 point, and the quarter point of each of that fall is critical. So 25% of that fall is 126.40, a third is 128.90, and much higher for half. But essentially, we're just about to test the 126.40 level, which is the 25% level of the Brexit drop, and we're about to break above the 2018 dynamic trend line, just the yellow dash line that's showing you the trend that we're about to break. The other key point, of course, is that the Brexit low was not broken. We have held above it, and I think whether you're a technician, an economist, or a central banker, that is a promising sign that the pound has managed to hold above its Brexit low at 118.40. Okay.
Looking at another big picture chart, I know we've spoken before about the cycles. You look very much at cycles and how things work well with cycles. I'd like, if I can, to steer the conversation around to where we are within that very much longer term cycle that we've been analysing over the years.
Yes, well, again, history often rhymes, even when you go back as far as 40 years. And this is a chart we looked at back at the 2016 referendum for the simple reason there's an 8-year strong cycle on the pound, and it's great when you actually see these powerful cycles hold in place. And this started at the anchor point is from 1985, but it even goes beyond that. More importantly, it highlighted the 16-17 low and highlights that this is a bottom that is likely to hold in place, which is further upside pressure for what we're currently seeing. Now, the risk scenario scenario to this cycle low from 2016 at 118.40 is, of course, if we break that low for any risk scenario reason, we must factor that in. And the lower side would be, target would be around 115. If that is a small probability but possible, if that were to happen, it would still, according to the cycle analysis, be part of a bottoming out process for the pound. So that would be this chart going up higher in favor of the pound against the dollar. Also keep in mind we've got historical 40-year resistance, once support, at 140, which was actually the very zone that held the market high that we clipped on last year.
Okay, well, let's wrap it all together now and bring a look into what's happening with sterling with the wider picture and take a look at some of the other currencies, because I know the sterling's not just been doing well against the dollar, but it has also been doing as well against a whole basket of currencies.
Yes, well, we always look for a rising tide or a broad move in any market that is taking an early leadership move. As we did when we looked at the gold, we could see gold rising against currencies here. We're looking at the pound ahead of Brexit to see if there's a broad story here. And there is. You can see the year-to-date price performance there on the left-hand side, chart A, showing that all currencies are recovering. If we look at Euro, Aussie, Swiss, dollar, yen and CAD, so that's the pound against them rising higher. But actually the Aussie and Euro are leading the most. And interestingly, on the right side, we can see both of those charts hitting their 200-day moving average targets, but the rest have yet to play catch-up and could be more lucrative long trades at the moment.
Okay, Ron, so let's just bring it all together and take a look at this basket in some more detail. And you're saying here that sterling against the euro and the Australian dollar are the leading light, if you like, in the crosses, this basket here. But you're suggesting then that there is more upside opportunity for sterling against the Swissy, the dollar, the yen and the CAD.
Yes, so there's two ways of looking at this. In terms of year-to-date performance, the pound is recovering most against the euro and the Aussie, but only in absolute terms by about 1.5%. But still, it's in the positive, having been largely in the negative. If we're looking at technical analysis terms, the other four charts that you mentioned there, the pound has yet to hit its 200-day moving average. So that's further upside potential if we're looking at the pound Swiss, pound dollar, pound yen, and pound CAD.
Okay, all right, Ron, that's great. Look, thank you so much indeed for joining us there from the IG Bank offices in Geneva. That's Ron William from RW Advisory.